Alright guys, bringing you a breakdown of today's price action. We'll start with the euro. And I'll actually back out to see the weekly. Alright, so of course coming into this week, big expectation was placed on price, taking out this previous week's low, right? Pretty much based on what we've been seeing in recent price action, right? From an overall perspective. Of course, we all know that every now and then, right, price will retrace only to take out, just like these areas here, are taking out buy side liquidity, a sweep of buy side liquidity, tapping into this imbalance, and then prices shifting away, right? So what I notice about price here is if we measure from here to here, which is the weekly imbalance, this area here is 50% of this overall imbalance, in which you can see price has come to that area, and we're seeing, a pretty steep rejection as we move to the daily candles from today, right? So yesterday there was a rejection, and then today, we actually swept that high. Now, what I do see now, which I'm gonna shift for a second, because I do believe right now that price is taking previous days highs, right? I don't want to shift away from that idea just yet, simply because we now have equal highs at this particular area, right? So what I would like to see is, if we're going to short tomorrow, I would like to see price get up here, run this. How many pips away is this? That's 50 pips away from that high. This is the ultimate 2017 low, this red line here. But nonetheless, these are equal highs that have been printed. And if we just come and we break down price action from today, right? We had some S&T divergence right here. So if we notice the Asian high, right? The Asian high was ran by the euro and also previous day's high, right? Ran that liquidity pool. And here's the base model, right? We have a sweep of buy side liquidity. Here's that major inducement. Here's our displacement. On the lower time frame right here, this is a down up, right? So here's this little swing high, then price comes down again, creates another swing high. This could possibly be a trend line if you can kind of see what I'm picturing here. But anyways, right over a true day open, here's that buy side liquidity, and then price comes back right at 5:30, right? 5:30, and then we see the big shift in price, right? But pay attention to this here, because once we come over to pound USD, if you notice, pound USD never ran this area, right? And then DXY, if the euro ran the Asia high, then DXY should have ran the Asia low, which is correct. And then we slightly run previous day's low. But the anomaly was right here between the euro and the pound USD. But even if you didn't see that, what you should have saw was our base criteria. Your liquidity sweep, major inducement of previous day's highs. You understand from there, right? We can look for a market structural shift. Here's the market structural shift. This is the displacement, and then on the lower time frame, here's your buy side liquidity within this range, right? This would become the new dealing range from this high to this low. We look inside that range for fair value gaps or imbalances, and we also look for areas of permanent buy side liquidity. Which this picture here, right? This has everything that we asked for, and this is a little institutional swing high, right? High, higher high, and then lower high on this side, and then we get the shift away, right? So Then as we approach New York session, as we approach the New York session, here's that previous week's high, which is used as support. Price digs down into this little imbalance here, and we come to a lower time frame. Now I did actually place buys today on the pound USD, because once we look at pound, you'll see this area, this low that was created at 645. Once we look at the pound, that same low that was created at 645 ended up being ran in this area here, right? And then we can come, I hate when this thing does this. Alright. But anyways, right, so this here, here's the profile. We have Asia, we have London sweeping Asia and breaking down, and then so what we should expect in this scenario in terms of daily cycle, you should expect New York to carry over. If prices is just now retracing right before that 9:30 opening, and look at how time and price aligns right here, then you should expect for New York to be a continuation of whatever London and Asia has already done. And in this area here, if we come to a 5-minute, I believe, yeah. So one thing I do want to talk about is order blocks, right? So in the smart money world, right, we have all been bamboozled into thinking that an order block is the definition of an order block is simply the last up close candle before a down move, right? And that is incorrect. An order block is a series of two or more candles prior to a price reversal, right? Now, the key distinction in this is that the order block in itself, right, which this would be the order block, has to have a fair value gap in the inside of that order block, right? So once this is printed, once price trades through the bottom of this candle, this here can be deemed as your order block, right? And then what solidifies it more is the market structural shift, and here is your imbalance right here, right? See how price trades right back up into the fair value gap. Right, so your entries will literally come from here, and stops, right? In this case, you could be conservative. I'm aggressive. I'm sorry, and place stops here, or you can place them here, right? I prefer to place stops here in this particular scenario, right? Of course, you would cut down your RR, but you don't have to be worried about if price is going to just tap here and then continue lower, right? But nonetheless, we see price push up. Here is a breaker, right? Here's a breaker, right? Has imbalance on this side, and then I want to say on the lower time frame we should be able to see something here. But here's a breaker, right? Here's a fair value gap from here all the way down here, and then price pushes back up right at 9:30, and we trade, I want to say, to the mean threshold of this order block. Let's see. Yep. So right to 50% of that order block right at 9:30, and then price pushes away, right? So pretty easy day in terms of spotting the right price action on the euro. Let's look inside of this real quick. All right, here's another beautiful example of what a true order block is. This candle here, or this series of candles, right? A series of up close candles that precedes a market reversal, right? So here's the order block that gets printed, and there's a sweep, market structural shift, right? And then here's a fair value gap right here. And maybe you get filled there, maybe you don't. But I like to place my entries right where the fair value gap begins. But anyways, this would be what we would deem an order block. There's fair value gap inside of it, right? And so we want to take entries from here right? Stops below there. You get a second chance right here to short, even if you don't catch this area here. And then here's that, that candle with the fair value gap inside of it, and you can see price just pushes inside of the fair value gap, which is also inside of this OB. Just 1 minute chart. Alright, series of up close candles, down move, fair value gap inside, right? So that is true OB, right? This would be our breaker. So price is interacting with that breaker, as a sell-off. And yeah, so in terms of projections, or understanding where you would TP at on this particular trade, there's a few different ways you can do this, but one of the more prominent ways is to take the failure swing, right? And this is a failure swing. So you could have looked at this the way that I just explained it, or you could say, here's a sweep, here's a failure swing. So here's the point of failure right here, right? I'm going to monitor what price does in this area, right? So you could have took more fractal entry after price responded to this breaker OB combination here, and then you could have took entries once that order block was manifested, and then you would attack. But what we do is we take the failed price swing, and then you can just align that with liquidity pools or some type of fair value gap, which in this area here, I believe on the higher time frame is an FVG. And we also want to add -2 on here. Whatever that is, okay. Yeah. So price should have, it did make it down there, right? So you see how this works, right? You just take the failure swing, or you could have taken the retracement of this from here to here, right? 27, right? Prices technically made it there. And then you can see 62 is aligning with these equal lows. Here's the equal lows here. So I do believe that since price is approaching these areas, that maybe on tomorrow we could see price reach down into those areas. It just depends on how the market profile works itself out. But what I am seeing is, this is a breaker, right? This area here. Let's come to the 10-minute chart. This is a true order block, right? Which is why I have the red line here. And then this is the breaker, right? As you can see, what's important about this area is that price actually responded to this area and failed, right? So I would expect for price to get back into this area and possibly give us some reversals, right? So the ideal trade scenario for this, if time is on our side, would be for to take shorts here, target these equal lows, and also these equal lows here, right? Hope that makes sense. All right, so that is Euro USD explained. And then if we move to the Pound USD, honestly, the same scenarios. Hang on 1 second, guys. All right, same scenarios with the Pound USD. The only difference is that we did not get a sweep of the Asia or previous day's highs. But remember, this was SMT divergence here at this area. And the reason that I'm even noting that area is because price, going back to our clarification of order blocks, this shouldn't even be in here anymore. Here's a true order block, right? a series of down closed candles before reversal, and then we have a fair value gap. Fair value gaps inside of this little pricing right here. Here's a sell side liquidity right here, and then once price responds to that, right, you could have taken entries from this alone. Once price responds to that, and what I want you guys to notice is this blue line here is me delineating the 8:30 opening price, right? So we want to keep track of the true day New York open and also the 8:30 opening price, right? All right, so here's an order block. Series of down closed candles, right? Once that is violated, remember it has to have fair value gaps inside of this range. Once that's violated, then price trades from the order block, right? You see this? It violates it, and then it comes back and rebalances this entire range, right? So this would be your intermediate term low. What you expect after an intermediate term low is a failure swing, right? And me and Lana were probably the only ones that have done a session on that. Guys, just give me some time because I'm just working on better ways to explain it. But here's that intermediate term low, right? Intermediate term low is defined by a fair value gap that is completely balanced. Once you get that, then what you expect is a failure swing, which we have here, right? Once we get that failure swing, price pushes up. I mean, remember when we take entries off of failure swing. So look, here's a sweep of liquidity, sell side liquidity here, get swept, fair value gap tap into, filled completely. This becomes the intermediate term low. What we expect after the intermediate term low, and just to re-explain what an intermediate term low is, an intermediate term low is a low that completely fills in a fair value gap, right? It fills in an imbalance. What you expect after you get that is a failure swing, which this failure swing is what we term a short-term low. So on both sides of an intermediate term low, you would have a short-term low and another short-term low. You see how the institutional swing low is created here, and in a more fractal view, institutional swing low is created, right? So once this failure swing is created and then we see price displaced beyond that, then what you could do, and these were my buys from earlier today on the pound USD. Remember, the whole premises behind this was that this area here swept liquidity, and then we didn't get that same move on DXY or Euro, right? And then what is this here? Series of down closed candles, up move, imbalance inside of it, right? So here's the fair value gap. Price pushes away, comes back, tap into the fair value gap. You see how that works? Right, and basically you would understand this based off of understanding advanced institutional market structure, right? Understanding that this is intermediate term low. I don't expect price to violate this intermediate term low until buy side objectives are met, right? In this case, the buy side objective is for price to push up here. So once those buys are activated, what we should be doing is keying this area here, right? Here's a breaker. Right, price pushes down, responds to it, and then we get displacement back through that area. Right, price pushes back down, and then we get that second expansion up, sweeping. So what they do is they just engineer more buy side liquidity, and then they come and they fill in the imbalance completely, right? So what is this high? This high becomes an intermediate term high, right? So shorts should have come, right? And what I'm showing here is this is an order block. Let me come and find the fair value gaps. All right, you have fair value gap here, so you can draw it from here. But it was one time frame where it's perfectly drawn. Let's come to 30. All right, so you could just say this whole thing is an order block, right? And then price is probably pushing to the 50% mark of this overall OB. Not quite, but nonetheless, this is an order block, series of up close candles before market reversal. This area actually sweeps liquidity, right? So here's a major inducement followed by a minor inducement, right? All right, and then what you should see is on the 5-minute, here's your breaker, right? Here's an order block inside of the breaker. Buy side liquidity here. Price pushes up, right? Here's the intermediate term low, and then what we expect after the intermediate term low is formed, we expect a failure swing. All right, this is violated. All right, here's the imbalance that's left behind. So price just fails to sweep, to tap back inside of that imbalance. But if price comes this close, I'm entering this position and my stops are going above that high, which I did not do this today. I took these buys, and that was it. I'm just running back into this area. All right, but that's the breakdown on pound USD for today. Right, so you guys will see major inducement here. Right, here's the range. Here's the new dealing range from point A to point B here. Right, we take a buy to sell scenario. Right, the key about this is that here's a breaker. This is the imbalance. Here's the buy side liquidity here. It's swept. Price comes back. Takes sell side. This sell side allows us to reprice higher, to take this buy side liquidity here, to completely fill the imbalance. At this point, this area here becomes what? An intermediate term low. Intermediate term high. What we expect after the intermediate term high is the failure swing. Why? Because on both sides of an intermediate term high, you should have failure swing. Short term high, and then intermediate term high, right? Creating what? An institutional swing point. See? Right, here's the fair value gap still sitting there. So it is possible, right, for price to push up inside of this area, and reverse. And you can also look at this institutional swing high as this here, right? 1, 2, 3, and then what do we say? Price tends to run out 3, right? Because this would be these. As of now, these would be considered equal highs, right? These highs here, relatively equal highs. So I would not be opposed, if time is on our side, to taking shorts from here. It's only 12 pips. I might even come up here. I don't mind a 16 or 20 pip stop. It does not bother me. And of course, right here, I would consider these relatively equal. But let's see if there's any liquidity targets that stand out. Okay, so what does stand out is this fair value gap here. Right, that price could possibly reach for a sell side liquidity here. So just to look at what this trade would look like, it's not bad. Say 1 to 6. 1 to 6 trading opportunity if time presents, if the scenario is taken. And then we'll take one more look at US 30. Alright, so I want to say I'm showing a 4-hour order block right here, right? Yeah. So this whole area, right, this would be an order block. What I think that US 30 is doing, and if you guys trade any of the indices, indices move alike, so Just take it from here. What did happen today is I believe one of them ran the Asian high and the other ones didn't. But you can check back for yourselves on that. All right, here's from a weekly. Here's a weekly fair value gap. On a daily perspective, we're seeing price sweep previous day's highs, just as the euro is doing right now. And then just to kind of point out the key move of the day for this particular pair. So I did think price would get into this fair value gap, but time wasn't on our side, so it was already at 3 o'clock, and then we're getting here. But it is falling. This high still has not been violated. But the key on today is this here. This area here, this is an order block, series of down closed candles, up move, fair value gap. So this is a true order block. Right, sell side liquidity here. See how the equal lows are engineered. Equal lows engineered. Here's your fair value gap. Right at 10 a.m. Price taps into this area, right? And then we push higher. And I'm not going to say that I can explain these shorts from here. Let's look and see if we can make sense of this move. So understand, I'm always looking to see if there was a fair value gap or something that could have possibly been a catalyst to a price reversal. So I don't necessarily see it, but I do want to point this out, right? What is this? An order block Y, series of up closed candles before a down move, and then price does what? Dig inside of the fair value gap. So that is a true bearish order block. Extended out of time, not quite. Alright, so not much for me in terms of this here. Only thing I would say about this is that there's a fair value gap, price comes into it, and then of course time. Right now we're in the phase of what we will call time distortion. So the algorithm is just going to manipulate as much as it can until we reach those optimal, kill zone times. But nonetheless, the key scenario on the US 30 or indices today was this move here, right? They engineered equal lows here, swept down here into this imbalance right at 10 a.m. and then we expand up, taking out this buy side liquidity pool here. So I probably would have not been a part of this move. I'll be honest, I wouldn't have called this move, but this one here, had I been trading this, this was a no-brainer. All right, that's all I got. Hope to see you guys take some pretty decent trades on tomorrow. Feel free to send me anything, any questions that you may have or any concerns, and we will address them accordingly.